Bitcoin has seen a short-term correction to the midline of the macro descending channel at 62,000. What does this correction mean, and should you be concerned? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic end to your week. In today's video, we are taking a look at Bitcoin's short-term price action, discussing the recent correction and bounce from the midline of the high time frame channel. We'll also be taking a look at Bitcoin dominance, the total cryptocurrency market, the macro charts, and the altcoin market cap. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We have a VIP channel with nearly 700 members. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Alongside that, you'll get access to our group chats, our general chat, our trading chart and education chat, our news, daily video, help, and trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more info. Without further ado, guys, let's dive on in. So taking a look at the last 24 hours of price action, we have seen a decent amount of volatility as Bitcoin corrected on the short term to retest that major area of support at 63 to 64,000, temporarily breaking below the horizontal level to retest the dotted trend line of the descending channel formation, a level we have been discussing for weeks now. Alongside with the dotted trend line retest, we can see just in 1 minute time, we will have a confirmed bounce on that RSI, again retesting that prior level of resistance on the RSI as an area of support. This is a good sign. We have retested a major horizontal area of support, and on the macro, we have retested our RSI downtrend and our dash trend line, both of which holding as support. So we have a whole bunch to get into today. Before we do, we'll jump into the market data. Taking a look at the market data, 24-hour volume is up 37%, sitting at $167 billion. 24-hour liquidations up a massive amount at 292 million, with 231 million in liquidations coming from long positions as Bitcoin temporarily drops underneath that $63,000 region, resulting in some mass liquidations. We can also see for the short positions, 60 million have been liquidated, the majority of the short liquidations occurring within the last 12 hours as Bitcoin bounces from that recent area of support. Moving over to the DXY, we can see here on the daily chart for the DXY, we've seen a little bit of movement, but again, not all that much movement for the DXY. We're still very much hanging around this 104 to 105 region. Again, we are expecting continuations lower. Eventually, if we do break below this change of character, this level at 104, if we break below 104, we are looking for continuations to our next area of support, 103, and potentially that sell side liquidity at 102.5. If we do want to see the buyers get back in control and the price continue upwards here for the DXY, we will want to see this resistance level at the 50 EMA break. If we are able to break above the 50 EMA, we could expect the DXY to continue to climb upwards on the short term. Until then, in a downtrend, good potential for continuations. Looking at the S&P 500 here on the weekly, let's zoom in a little bit to the weekly. We can see another red weekly candle developing, and again, not really all that much concern here for the weekly, provided 5,300 is able to sustain. If we break below 5,300, that would be the first sign of macro macro weakness since we originated or developed this overall uptrend. Remember, we broke out of this descending, expanding wedge pattern, entering an official uptrend. We established our highs, we established our lower highs, we established highs, creating these lower highs along the way. If you notice on these corrections, both on these corrections on the downside, none of these corrections actually resulted in breakdowns of these prior established high points. This is a very good thing, as it's telling us we're developing strength on the way up. So we do have now a correction in the short term developing, and if we were to break underneath this prior established high, that would be the first sign we have seen of macro weakness in this entire uptrend since the start of, what is this, March 2023. Again, provided 5,300 is able to sustain, the trend will likely continue. If we break down, we will likely enter a higher time frame downtrend correction to retest that 5,000 level, which will be very, very bearish if we do. Enough about the S&P 500. Let's go ahead, guys, and jump into Bitcoin. So today we're going to be taking a look at Bitcoin dominance, the total cryptocurrency and total altcoin market cap, the macro charts, the short-term price action, and of course, the daily as the daily candle just closed. So without further ado, a quick word from today's video sponsor. Check them out for 15% off your trading fees, and we'll jump into the video. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump back into it. So starting on the daily chart, and within the last couple of days, we've seen Bitcoin correct quite aggressively on the short term, resulting in a move around 70,000 to a low of around 62.5k. And I think this particular correction definitely sparked a lot of fear. And as always, when we do see downward price action, people start to get really worried for the potential future of Bitcoin. They expect more continuation downwards, and we've almost been, I guess, programmed to believe that these corrections will result in just more corrections. As the last 4 or 5 months, we have seen a similar thing. We've seen rallies to range highs followed by extended corrections to range lows, rallies to range highs, extended corrections to range lows, and this pattern is starting to develop. But it is very important to remember, key trigger points on the charts are still intact, and the key trigger point to increase the likelihood of a directional continuation to the range low has not yet been met. So let's discuss why Bitcoin is still technically bullish here, and while Bitcoin still does have a chance to continue higher. So taking a look at this channel, this is going to be our macro consolidation, the consolidation we have been in since March of this year. I can't believe it. Look, it's March, April, May, June, July, August. We're looking at 5 months now, a very, very, very long consolidation for Bitcoin. In fact, one of the longest consolidations we have seen for Bitcoin overall, and the longest consolidation we have seen for Bitcoin within the traditional 4-year or bull run cycle. Taking a look at this, we can see the mid-level has acted as a significant trigger point for directional continuations for Bitcoin, a level we have recently retested within the last 24 hours. Moving over, we can see prior retests of this level indicated by our first green circle. We have seen this level act as support for continuations to range high. We have also seen this area act as resistance for continuations back down, as well as points of trigger points where we break through and we see complete directional shifts in the opposite direction. We've seen this in this instance, and we've saw this in our prior two instances. So we know the mid-level, this downward dotted trend line, the mid-level of the channel is a trigger point of which, when broken, generally results in a directional continuation in the way of which it were broken. So if we were to see a break of this level downward, we would generally see a directional continuation downward, for the most part targeting our range low level. Now, for the breakdown to be valid, we do need to see a daily candle close below this level. We have not yet seen that. The 62.5, and again, this level has changed from 63 to 62.8 to 62.5, as it is a downtrending diagonal resistance. So the later the date, the lower the price, obviously, which is downtrending, is a significant trigger point, not only from a structural perspective, but it holds some massive technical significance, which we'll discuss in just a moment. So I do want you to remember this dotted trend line, and the way to look at it is really, while we've sustained above the dotted trend line, it is unwise to assume we are going to go below it. But if we do break below the dotted trend line, it is wise to assume that we could potentially drop all the way down to the range low. So again, it is a trigger point that, when broken, increases the likelihood of a range high or range low retest, depending on the direction of which it was broken from. That is how we look at these trigger points. In saying that, if we're taking a look at the macro structure, Bitcoin is still within the confines of the descending channel. I have people telling me all the time, Whale, you've been saying it's going to go past 70,000, blah, 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 for months. Yes, I have been. But if you take my words out of context, you can make it sound like anything. Alongside saying that, I've also been saying you should not be expecting a directional continuation up into the $80,000 region until we have three of the three validation points we look for directional breakouts. In this instance, we look for our trend, we look for our structure, and we look for our strength. In this instance, we have never had more than one. We have had our strength in terms of momentum. We have never broken above the downtrending resistance of our channel, and we've never broken out of the channel itself, which is going to mark as our strength, our trend, and our structure. So it is only upon the breakout of the descending channel formation do we then see that trade expectation activate, and that is when we expect directional continuations higher. Until we actually break that level, it is a pending trade position. Imagine if you were to say, I want to enter a trade once it breaks over the $1 mark. You would have a pending order above this level. You may say, while the trade is under $1, there is a greater likelihood we eventually trigger that active trade than not, while the price is still underneath. And that is exactly what is happening here. From a technical perspective, we'll explain in a second. From a macro perspective, there is a greater likelihood we eventually see a break of this 70,000 resistance, and thus a directional continuation into that mid 80k region, as per the measured move ratio from point number 1 to point number 2 of the descending channel. Taking that and applying to the breakout gives us an 85,000 region. Then not. There is a greater probability we see that eventually. When will we see that? We will see that when we break out of the descending channel formation, and everything goes to accomplish, or should I say, complement that breakout. So let's discuss why the midline and why the lower trend line is so significant. Moving over to the macro charts. This is a chart you have to really pay close attention to, and I've been saying it for weeks. We told you this was important all the way back down over here when we retested the leading span B. We saw a strong bounce. We're telling you once again, this level is important. And this instance, it is important because if we zoom in, you can see the baseline of the Ichimoku cloud. And this chart is a little bit delayed. The BLX chart is a little bit delayed, but the baseline of the Ichimoku cloud, this red line here, is sitting exactly at the mid-level, the dotted trend line of the channel. In fact, this is the exact point we retested on that recent correction. Furthermore, what we can see is the leading span A is sitting around about 63,000. Both levels we are sitting above of on the daily chart. If we were to break underneath on the daily on the Ichimoku cloud baseline, that would result in failure to sustain above the cloud and would result in a directional continuation to the leading span B. The leading span B is sitting at 55 to 56,000, which lines up perfectly with this liquidity pocket, which also lines up with the descending trend line of the descending channel formation. Mind you, the loss of this level, particularly the loss of 52,500, which is our sell side liquidity, would invalidate the expected macro directional breakout eventually of the channel, okay? And only upon that would we no longer be expecting an eventual break of 70,000. That would result in a macro correction lower. Let's talk about that, guys. If we see the break of the leading span B, historically we have seen corrections of 15 to 71% for Bitcoin, meaning if we break below the leading span B, we would not only be ending the uptrend we have been in ever since we broke out of the clouds over here back in January 2023. This is when the uptrend started, right over here, okay? We've been in an uptrend ever since. A loss of the leading span B would mark the initiation of a macro downtrend. We would be expecting a retest of the first lower support from the breakdown of the leading span B, which is at 48,000. So to put it again, from a structural perspective, Bitcoin is in a downward consolidation, but it is macro bullish. From a macro technical perspective, even if we're going off the simple notion, the trend is your friend until it ends, we are in a uptrend. You cannot contest that. That is an objective fact. We are, from a technical perspective, and a structural perspective, we are in a uptrend, and it is wise to bet on the trend, and only, like I said yesterday, innocent until proven guilty. The trend is up until it is no longer, and when it is no longer, we know where that is because we have invalidation points on the charts. A loss of 55,000 would tell us that for the first time since January 2023, we have inverted the trend. We have entered a high time frame downtrend, and we would invalidate the bullish structure that is developing, and this structure is the bullish structure that will facilitate a directional continuation upwards. So if we invalidate this structure, we no longer have a structural standing or a structural standpoint to actually expect a continuation higher, and thus we would see that directional continuation, marking this as the local or macro top for Bitcoin. Until then, it is not the top. Until then, Bitcoin is bullish. You have to watch the charts. Again, people always say, oh, if only Bitcoin can go up, or if only Bitcoin can go down, I can make money, I can profit. Or I'm a bear, I want Bitcoin to go down to 50K so I can make this. Or I'm a bull, I want Bitcoin to go up to 100K so I can make this. The reality is 99% of people are going to lose money anyway. Regardless of which direction Bitcoin goes in, regardless if Bitcoin goes in the direction you want it to go in, or it doesn't go in the direction you want it to go in, it doesn't matter. The most people are going to lose anyway because they do not have correct position management. They do not know how to manage their capital and manage their risks. They do not know how to take profit. They do not know how to adjust their stop losses. They do not know when to close their positions. The vast majority of people, even when giving an opportunity to profit, will end up fumbling that position anyway. So stop sitting there and thinking, I'm just going to wait until this happens or this happens. You have to be proactive with your trading. You have to tackle the barriers of which are going to hold you back anyway. Look at you as a trader right now and think about, well, what are my shortcomings right now which I can fix that could benefit me in a future period? And focus on that rather than waiting for the market to give you handouts, because for the most time, when it gives you a handout, you're either too late to recognize it and you enter late, or you get in and you're unable to actually make any decisions because you're shocked that it's happening, or you're caught up in the fear or euphoria, depending on the directional continuations of the market, that market will give you. So it's very important to control yourself first and develop your skills first before you try, make these wild predictions or make these wild profits. If I look at myself as a trader, I don't really care where Bitcoin goes, and this might come as a massive shock to everyone watching. I couldn't really care if Bitcoin goes up or down or sideways. If I look at my positioning over the last 12 or 32 months, we bought Bitcoin down at 16.5K when everyone was bearish. We are still holding that Bitcoin. We took some initial profits at 32K. We re-entered on the break upwards. We bought altcoins around about, I think it was August, October last year. We have sold all of our altcoins on this correction at a massive profit. And then we re-entered our altcoin positions, only risking a proportion of the profit we secured on that sell. We are in a position where we cannot fail. We have only got money in the market that we are risking, which is from profits from our prior altcoin sales, and our Bitcoin is at a significant amount of profit. So if Bitcoin goes up or down, we end up winning anyway, because we've positioned ourselves over the last 18 months to win no matter what. And anyone who's been following me have done exactly the same things. The only people panicking are the people who are unsure or are late, and that is just how the market is. Moving over, guys, let's take a look at Bitcoin dominance. Again, altcoin season, is it going to happen? Is it not going to happen? We don't know. We can say this for a fact. If we do see Bitcoin dominance correct, okay, which will be very, very likely if we break below this uptrend, and almost certain if we drop below the 50 EMA, if we see Bitcoin dominance correct and we see the total cryptocurrency market cap rise, we will see an altcoin season. Historically, Bitcoin dominance drops down to that 38 to 40% region for Bitcoin tops. So again, if we are expecting a traditional top for Bitcoin, we would be expecting Bitcoin dominance to drop, and we would be expecting Bitcoin price action or price to rise in value, and therefore we could assume the total is going to increase as well. So altcoin season is on the table. If we take a look at the total, we can see this is going to be the total market cap over here. If we do look at the total, we can see a very similar structure to that of Bitcoin. We have the descending channel formation. Again, same validations like directional continuations. Break of the range, the downtrending range high would result in directional continuations higher. Breakdown of the lower support level would invalidate the descending channel structure and result in a directional continuation lower. Very, very bearish if that happens. Very, very bullish if this happens. Until then, we are still in consolidation. Yes, it's boring. Yes, everyone's getting sick of it, but that is just how the market is sometimes. We can't control it, we can only go with it. Looking at the total for the altcoins have copped a little bit of slack in the last couple days, bleeding out a little bit more than their traditional than their Bitcoin counterpart. Even in the last 24 hours, you can see this 3-day candle on the total has actually flipped up green, while we are still red for altcoins. So altcoins are falling behind a little bit, and that is partly due to the fact that Bitcoin dominance is slightly still moving upwards. Looking at it objectively from a macro perspective, however, we are expecting the total continuing upwards, provided the descending channel formation is able to sustain. We could see a sweep low and then continuation. This will be max pain if it does happen. Obviously, that's not going to be fantastic, but it is possible. And of course, if we break upwards, we would see a directional continuation higher. Let's finish up on Bitcoin's price action. So a horizontal support level, keep it nice and simple. Above here is bullish. Below here, we expect 60,000. Simple, okay? Break below the dotted trend line, we expect the first target to be $60,000. So again, I'll say it again, a break below the dotted trend line, which is also going to match up with the horizontal level, we expect the first target to be 60,000, which would be around about that 200 SMA level. If we do lose the 60,000, we could see a drop into our major lower level of liquidity. That would result in a correction into a range low, and we'll have to talk about whether or not we're going to bounce from here and continue higher, or see a correction from there and continue lower if that occurs. And again, for that to occur, we would need to break below the dotted trend line and break below the current horizontal support. Until then, Bitcoin short term is looking decent. We have seen some strength. We are bouncing. We've established this area of support now 3 times, and we shouldn't expect it to break down while we are sitting above. At the moment, for Bitcoin to continue higher, we would of course need to break through all of these short-term levels of resistance marked out by the green lines, and of course the 67 to 68k resistance, and most importantly, break through our $70,000 resistance to continue aggressively higher. Thank you for tuning in. Have a fantastic day. We'll catch you guys next one on Sunday. See you then. Bye.